Hello guys, you're welcome to my YouTube channel. This is Synthetic Goddess. On this YouTube channel, we teach strategies to become a profitable trader even if you're a beginner. So if you're new to this channel, kindly hit the subscribe button and turn on the notification bell to be notified whenever I drop any video. And if you are an existing viewer, you are welcome back to this video. Based on high demand, I decided to create a Telegram channel for synthetic traders to share analysis, to share directional bias, and to share their thoughts about any instrument. If you would love to join this channel, just check the description box to get the link to the Telegram channel. So in this particular video, I'm going to be explaining what primary inducement is. I have explained secondary inducement, so if you're yet to watch that video, you can go to my channel and then look out for the video. Just check the video and watch the secondary inducement. But right now I'm going to be explaining the primary inducement. I'll be explaining the primary inducement. Like I said earlier, we have two types of inducement. We have the primary inducement, we have the secondary inducement. Primary inducement, and then we have the secondary inducement. And I said the secondary inducement is after we've broken a structure range, the next low created after it, if it is not taken, then the market will come back, take it, and then use a POI around that place to continue the movement. Now for primary inducement, this is how it works. You look out for your structure range break. After seeing your structure range break, then you look out for your first break of structure, meaning your first minor break of structure. Okay, I am going to explain this with volatility 25-1S index. If you would love to trade with my broker, check the description box also to get the link. You can trade 24/7. So if you would love to trade with my broker, the link is in the description box. So here we are in an uptrend. Okay, basically on H1 1 hour time frame, we've been trending to the upside. So we had a break of structure here, we had the last break of structure here, and as you can see, this movement, this particular low did not come back into our internal range. It did not come back into the internal range, this particular low, and then we had a whole lot of movement to the upside. We had this distance to the upside, Now we'll first pick our secondary POI because of the distance, then we'll pick our primary POI. Now, how do we get our primary POI? You zoom in or you go to the lower time frame, then you mark out your first break of structure. So where is our first break of structure? This is our first break of structure. Our first break of structure is here. Okay, we have the first break of structure here, which made us know that we had a change of character. Now, which is the low that formed after the first break of structure? You can see we had this low form after the break of structure. This was the low formed after the break of structure. So we are going to be marking that out, and let us see what the market is giving to us. So this is the low formed after we had the first break of structure. Remember, for secondary inducement, after this eye has been broken, where is the next low that formed outside this eye? Now we have this break of structure. This is the low that formed after this eye. this is the low that formed after this high. So this is our secondary inducement. But for primary inducement, you're watching out for the first break of structure. After the first break of structure, the next low created is the inducement. Now, sometimes it might be tested before moving to the upside. We might have it tested before moving to the upside. If it is tested, then you don't have any issue. But if it is not tested, you're waiting for the market to come back and pick your primary inducement. And as you can see, the market came back and entered into this range. It entered into this range perfectly. Now let's look out for another movement. So we had this break of structure to the upside. Let's just analyze this. We had this break of structure to the upside. After market broke this structure to the upside, right? If we check the lower time frame, let's check this. If we check this lower time, let's check the lower time frame. Let's check the 15 minutes time frame and see what happened at that particular area. So we had this break of structure. Okay, now where is our first break of structure? Here, this is our first break of structure. Let's just mark this out as our first break of structure. You can see we do not really have a movement. We do not have movements here. So this is our first break of structure. We are considering this as our first break of structure. We're going to be considering this as our first break of structure. This is the trend. So this is our first break of structure. Where is the low created after the first break of structure? So this is the low created after the first break of structure. So this is our primary inducement. This is our primary inducement. So we have our primary inducement here. This is our primary inducement. Now we are expecting the market to continue the move after taking our primary inducement. After taking our primary inducement, we just get a POI that we can walk around with here and continue the movement to the upside. Let's go to 1 hour again and continue looking out for our primary inducement. So yes, so we have the break of structure to the downside. Let's watch out what happened here. We have the break of structure to the downside. Okay, this is a break of structure to the downside. Here's a break of structure to the downside. And looking at this particular formation, our first break of structure is around this area. This is our first break of structure. So this is going to be our inducement high. This is going to be our inducement high. This high is going to be our inducement high. And as you can see, when market got into that particular inducement high, this one, after the market got into this particular inducement high, the market reacted perfectly. The market reacted perfectly. Remember one of my videos that said when market gets to a strong POI, it gives an inducement to continue the movement. Now you can see this particular place is a strong POI. This is a strong POI because we've not taken the inducement high before. We've not taken the inducement high, but based on the fact that market is trending to the upside now, we've had our first break of structure. Market is now trending to the upside now. So based on that fact, the market will only react at that strong POI, and the reaction will be very perfect, that it's going to take inducement, and then you're going to count it as break of structure. But nevertheless, you can see after we got to that POI, the market tested it and came back, took one of this low as inducement and continued to the upside. It took one of this low as inducement and continued to the upside. So if you see any market get to a strong POI instead of breaking that POI immediately, the market would want to use that POI to take liquidity and continue to the upside. So let's check if we're going to, okay, let's check in between this particular market. So we're going to be checking for our primary and secondary POI. So we had a break of structure to the downside here. Let's just check this out and see if our primary and secondary inducements will be respected. We had the break of structure to the downside. This is a break of structure to the downside. Our first POI is the secondary POI. We're going to mark out our secondary POI. This is our secondary POI. Now, how do we mark out our primary POI? This is my secondary POI. I'm marking this out as secondary POI. This is my secondary POI. Then I'm going to be marking out my primary POI. So we had first break of structure inside this place, and this is how you just mark structure. Don't just mark it anyhow and expect the market to just move anyhow. It won't work. So we had the first break of structure here. Where is our inducement? So basically we took out this primary inducement with this secondary inducement. We took out our primary inducement with secondary inducement, yes, with just 1 pip. We took it out with just 1 pip. Took it out with very little pip and then started moving to the downside. So basically this is our secondary inducement that we're expecting the market to take before moving to the downside. Basically the market did not take it, but let us watch what happened here. We had a break of structure to the downside. This is where your impulsive movements, this is where it comes in. We had the break of structure to the downside. We do not have this secondary POI tested. Also, this secondary POI was not tested. We created another secondary POI that was not tested here. And see what the market did. The market actually used this range, this particular range, to continue to the downside. Remember, we are inside the internal range, so you are not waiting for the market, you are not forcing the market to eventually come back and take your inducement. You are not forcing the market, you are following the structure as it is moving. So after that, after taking this particular inducement, we induced this high. With this high, the market moved to the downside. The market gave a sharp move to the downside. Let me show you another thing, another beautiful thing. You can see we had this break of structure to the downside. Another beautiful, we had this break of structure to the downside, and we had this high as inducement high also. This is an inducement high. Just follow structure as it moves. This is an inducement high. We're going to be marking out our SC candle for a test. We'll be marking out our SC candle for a test. See what the market perfectly did. The market tested it beautifully well, and you can see, like I said, you can see we have this taken. We had this low, in fact, okay, I think we had this low taken. Yes, we had this low taken just because of this inducement. Just follow structure as it moves, and you can see the market came back and induced a place it has not induced before moving to the downside. The market first induced this, it moved to the downside, took out this low. This is your external liquidity that you are targeting, and if you're targeting this external liquidity, that is what you are targeting. You can see the market picked it out. But basically, I won't be targeting this external liquidity. I'm going to be targeting this particular inducement. The market might come back and use this as an inducement, because this place might become a reaction zone later. So I'm going to be targeting this low as an inducement that the market will use and continue to the upside, because I know we have different areas we've not tested. We had this place not tested, we have another place not tested. So I'm going to be using this particular low as my TP. Once the market reacts to this place, I'm going to be using this low as my TP. And you can see the market came back and tested this particular zone again. This is what we call complex corrective wave. This is what we call complex corrective wave. And then the market broke structure to the downside. And that is how you just follow structure. That is how you just follow structure. You don't just pick out any POI. You don't pick out any demand zone. You don't pick out any supply zone just for the market to come back and use. I saw something beautiful on volatility 10 index. I saw something beautiful there, and then I think I analyzed it into my Telegram group. So we had a break of structure here. We had this break of structure to the downside. I analyzed this. We have this break of structure to the downside. We have this break of structure again to the downside. We have this break of structure to the downside also. Now after this break of structure to the downside, I am marking out this high, this particular high, as my inducement high for this particular structure. Inducement high for this structure. So yeah, I'm marking this out as my inducement high, and then I am marking this place out as my POI for the inducement high. Then we now had this break of structure to the downside. We had this break of structure to the downside, meaning we had impulsive movement. You can see the impulsive movement to the downside. So we had this as break of structure to the downside. Basically, the markets came back into this range, but this is our inducement. This is our inducement for this range. This is our inducement for this range. So I'm going to be marking this out as inducement also. I'll be marking this out as inducement. So I'll be marking this out as inducement. And basically, I'm going to be marking this POI out as my POI after inducement. This particular SC candle, that is what I am going to be marking out for this SC candle. And you can see what the market perfectly did here. We really sold. Like, we sold so well. We really sold to the downside. We really had the market sell to the downside. So this is how you just follow structure, and then you just wait for your inducement to be taken. Just follow structure this way and wait for your inducement to be taken, and you are good to go. Don't just mark out any POI. Don't mark out any structure. It won't help. It will definitely not help. Just mark it out this way, and then you're going to see the beauty in it. You're going to see how easy and flawless your trading will be. Okay, so I will see you guys in the next video. Have a lovely trading week. Happy new week. Bye.